But moving on to the stock of the moment, which is Minda Industries. It's up 20% after reporting a very good set of numbers. Sudhir Jain, the group CFO of the company, joins us on the phone line from Delhi to talk about that. Mr. Jain, it's been a stellar 19% growth that you've seen on your top line, and margins have improved a lot as well. Just give us a sense of what are the fresh orders that you've won this quarter, and what kind of growth do you see in the second half?
Yeah, good morning.
Morning.
Okay, let me tell you the background. Consistently, we have been sharing information with you. In the last 2 years, we added a lot of capacities in our existing products, and better capacity utilization, better operating efficiencies has resulted into these numbers. And also, we are consolidating our operations under MIL. As a result of our Vietnam and Indonesian operations becoming 51% subsidiary of MIL, now switches, lands, horns globally is part of Minda Industries Limited. All these operations have become part of MIL. As far as new orders are concerned, we have got a very strong R&D and engineering base. So whenever there is a new model launched by various OEMs, we become part of that at the stage of conceptualization and development. We are into all segments of auto, two-wheeler, three-wheeler, four-wheeler, as well as commercial vehicles. As you know, the main customers are Maruti, Bajaj, TVS, Honda. So most of the new orders we are participating, which is resulting into about 19% top line growth. Just to remind, in last 10 years, our top line is growing consistently at 20% CAGR, which we hope will continue in times to come.
Actually, that was going to be my next question, Mr. Jain. Will you do 20 or will you do even better in the current year?
Of course, we are targeting better. And historically, H2 is always better than the H1. And as you are aware, the industry is also improving. In passenger vehicles, there is a 7% volume growth in H1 year on year. Two-wheeler, of course, is flat. But in case we see the October numbers, we hope that with this festival season, two-wheeler will also pick up. And the industry should grow and may touch double-digit growth in H2.
Okay. In your presentation, you've mentioned that you've received new business from WABCO as well, and the supplies will begin in Q4 FY16. What is the quantum of the order that you've won from WABCO?
Firstly, this is in aluminium die casting. Aluminium die casting parts we would be supplying from our aluminium die casting unit. And the annual turnover expected in the first year would be about 25 to 30 crores, which will increase later on.
Your margins have improved fairly substantially, 300 basis points. Is there scope for more?
Yes, there is a scope for more, and the whole management team is highly focused on improving the internal efficiencies. This will come from better capacity utilization and internal operating efficiencies. Just to recollect, we set up and we expanded our capacity of switch and aluminium die casting about a year ago and set up 2 plants in Hosur. Lighting was also expanded both in Manesar as well as in Pune. Blow molding parts, paint shop was set up in Bawal. So all this is resulting into better top line. And by improving operating efficiencies, bottom line is expected to improve even further.
Okay. You mentioned that your new order from WABCO, you will get 25 to 30 crores of revenues in the first year. You also said that the Minda Acoustics division has received one export order from Renault in Brazil. What is the quantum of that order?
This order has come from Brazil. As you are aware, we acquired this Clarton in 14.
Yes.
The unit is in Spain, and further it has been extended into Mexico also. So this Brazil order will again add a similar amount to our turnover in the first year, which is likely to expand further.
No, I'm sorry, I didn't get the amount.
About 25 crores.
Okay. What will be the contribution of your international division in FY17? Because you're telling us in your presentation that the Horn operations, that the Mexican operations, which will start in April 2016, will actually give you the money only in FY17. Likewise, as Sonia was telling you, the Brazilian operations. If you put all these together, what is the FY17 international contribution?
Actually, we are targeting that of the total turnover, 20% should come from international operations, which means our plants outside India as well as some exports from India. Today, I think we are touching about 12% of our group turnover. So we hope to take it to 20% overall in 17.
And are margins higher for export and international orders?
Yes, margins are better in global orders.
Okay. Just wanted one clarification. You have received a new order for automotive lighting components from Suzuki. This is different from what you supply to Maruti in India, right?
That is different. This Suzuki order is from the Asian countries, particularly Indonesia, for headlamp, tail lamp, four-wheeler. So from our Indonesian plant, we would be supplying these components lighting to Suzuki there.
Okay, and to service all of these orders, will you be increasing your capex plans? What is the capex currently for FY16 end and for FY17 as well?
In our existing products, we don't see much capex in the current year as well as in the next year, because already the capacity has been created. Mostly the capex would be for replacing and to make over the existing equipments and upgrading that. This is generally of the order of 50-60 crores annually. Yes, in the new products this year, we are making capital investment on making alloy wheels. As I shared last time that we are setting up alloy wheel plant in Paval under the name of Minda Kose. It is a Kose joint venture. This would be the second plant. Earlier plant is in South. In this plant, the total capex in two phases, we are incurring about 200 crores with 60,000 per month wheel capacity.
Okay.
So this is over and above 50-60 crores, which we generally incur every year in various units.
Your interest outgo is practically nothing, some 2 crores or something per quarter. You're debt free, and will you remain that way even after this capex?
Some debt would be added with this Minda Kose investment.
Okay.
But even after this, debt equity ratio would be within 0.7 to equity.
Okay.
So that way we are maintaining quite a, I will say, strict discipline as well as debt equity is concerned, and expanding generally from our internal cash accrual.
All right. We'll leave it at that. Mr. Jain, pleasure speaking with you. Thank you very much for joining us. So it's a 20% annual growth that they've been reporting for some time now, many years now, and that could, if anything, be bettered in FY16. That's the word coming in from Minda Industries. It's one of Varinder's Pataka stocks, and it's given a bombshell of a performance, 20% today itself from Minda Industries. The commodity markets have opened, and we'll quickly run you through the commodity rates. Let's get crude going first, perhaps. Yes, crude down a bit. It was up sharply in the global markets, but the Indian markets were already open at that time. Gold a tad higher, 128 rupees. It saw a lot of selling yesterday, so some short covering in gold coming in, and that's how copper has opened. Stronger global performance leading to a 0.1% rise.